Goldman Sachs is buying out its Securities joint venture in China. The move will make it the first Wall Street bank with full ownership of a securities business on the Chinese mainland. China scrapped foreign ownership caps on securities firms earlier this year, further opening up to its capital market. Rich Turin is the author of Cashless China's Digital Currency Revolution. I asked him about the significance of Goldman Sachs' plan.
It is a tremendous, strong vote of confidence in China and in the growth prospects for Chinese companies. So it's a great day in China. It's a great day in Goldman Sachs headquarters in New York. And this is a transaction that will benefit Chinese investors as well as investors from the West. So what's going to happen with this is that China is going to get tremendous technology, investment technology out of this. Goldman Sachs is going to build up its office, and frankly, it's going to bring the asset management and security space forward in China.
Why is this year significant in terms of reforms to China's capital markets and international access for investment in its financial system?
It's a significant year for a couple of reasons. First of all, it's very clear that China is living up to its commitments that it made during the trade wars and the trade bargains that were made between the United States and China. So no question about it, China is living up to its commitments. It's also a big year because, of course, foreign markets are being hammered. This is a very difficult time, and China is coming out strong in its post-COVID or post-pandemic economy. And what you're going to see is that Western companies are looking to China for growth. China is a new market. It is a big securities market, and it's a market where margins are higher than the compressed margins that these companies are getting in the West.
Have other international companies made similar moves?
Absolutely. In fact, what's been happening is there is a modern-day gold rush. Come to China, take over your subsidiary in full, so you can look at companies like Morgan Stanley, who've taken over majority control. And in fact, just as a note, Goldman took over 51% control of its subsidiary here in China back in April. And now they're going for, of course, 100% ownership. But Morgan Stanley has majority. Credit Suisse also has majority.
What additional reforms do you think Wall Street would like to see?
There are three big reforms that Wall Street is looking for. The first of them is easy. They want a level playing field. They want the same access to the markets as the local Chinese companies have. The second, of course, is accounting standards. This has been a big issue in the United States. So, of course, Wall Street firms are going to look to make sure that accounting standards are up to par. And the third one, of course, is to open the door for capital flows to leave China. So reducing capital controls that restrict Chinese access to foreign markets.